John, thanks a lot for taking the time to be with us today. For any of our business owners that aren't already familiar with you, can you just tell us a little bit about what you do and give us a little introduction?
Sure, absolutely. First of all, thanks for having me here. My name is John Carter, and I'm the founder and CEO of a company called Simpler Trading. And gosh, I've been doing what we do is it's hard to describe what I do. Like if I'm at a cocktail party, I usually just say web development. But what we are is a portal, and we provide online trading education for people who are interested in becoming active traders. Like either they could be working full time or they could be trading full time, but they're checking the markets. Like so, we're kind of a resource for them. We send out text alerts, we provide education. And it started off as kind of a one-man shop, kind of out of the basement, so to speak. And then today in 2014, we hit number 14 on the Inc. 500 list, and we've got like 30 employees, people, different parts of the country. This is our main office here in Austin, and it's great. I mean, I love kind of like I'm a trader, and then as I got into the business, I figured out that wow, I need to learn how to run a business. And so, and one of my mentors is Tom Sosnoff. He's the guy who founded Thinkorswim, sold it to TD Ameritrade. So he's been an informal advisor along the way. I'm like, all right, how did you do this? You're a trader. How did you learn how to run a business? And so he's helped me a lot as well. And also just learning basic things like if you want clients, you got to learn how to market, and learning things, basic internet marketing things and stuff like that are that I feel comfortable with. There's stuff out there, that marketing stuff that's crap, that's it's too much, but you still gotta understand what works. And so that's been my adventure, has been both trading and trying to grow a business that doesn't drive you insane.
Which is a perfect mix. And we talked a little before the interview. I've been following you since probably 2006 or 7. I read Mastering the Trade, and your marketing
That's awesome.
At that point brought me to your website, brought me into your funnel and your trial and your product. So I think you have a lot of great information. But let's start with the trading side. I think a lot of business owners and people in general at some point in their life, or a stock market, I got to get into it. I got to put some money into it, maybe for retirement or to make money or just to do. What's the biggest mistake you see people making when they first start trading?
Well, the list is long. It's long, but it's short. It's all different derivatives of it. And the biggest mistake I see is people associating a loss with shame. Like, oh my God, I'm not doing this right. And really, it's a lot of it's just timing. It's just like, hey, most people, you're looking at a stock like Apple, and if it's at like $155, well, a lot of people have been in it for a while and they're thinking about taking profits. And so if you're getting in right now, you're going to have to hold through this, wave of profits. And that's the biggest mistake, is you just got to learn to be able to take small losses without any shame or any of that BS, because it's all psychological crap. And once you start doing that, you get into a flow state. It's like, all right, this isn't working, cut it loose. Let's move money into what is working. And that's the big thing. And so just, it's important in business too. And trading has actually taught me a lot about business. And it's just cut your losers short. And that's, marketing campaigns, employees, that aren't working, like cut them loose. It's the same thing with trading. And I always look at it as like, if you've got like say 5 investments, think of it as that's 5 employees working for you. And if you've got 5 investments and one of them is just acting, it's not working, if as a business owner, that's like an employee stealing from you. Get rid of it. So you just cut it loose, and then just it's that attitude that you want to have towards it. And it just becomes it's a less emotional roller coaster that way. It's just like, oh, okay, this is what's happening. Let's adjust and move forward.
That's perfect. Yeah, we actually there was a psychologist we spoke with the other day as part of this summit, and I actually gave you credit. He came up with a 72-hour spacing rule. He's like, if something really emotional happens, walk away from it completely for 72 hours. Like, don't argue with your wife. Don't argue with the partner. He's like, take space, let it sink in a deal. And I actually brought up with your trading rules, or if you had so many losses in a row, you walked away for the rest of the week and stopped trading, because it became an emotional thing rather than a standard thing. So I think it's great, and I'd imagine you have some systematic rules in place for that in the business world as well. But I mean, I know that made a big difference to me when I started trading. So we have a lot of business owners out there that are probably already busy, that are still thinking about this. For someone that doesn't have a lot of extra time, that wants to kind of start getting into it smartly, what's the best place to start if you do have a limited time to learn about trading the market?
If you've never done any, if either you've done no trading or you've done a little bit, I'll tell you like the two things. One is if you're thinking like, oh, I've got $10,000, I think I'll day trade futures, while I'm working full time. I can save you a lot of money right now, and don't do that. I mean, there's few guaranteed ways to lose money, but that's one of them. So if on the other hand, just like, well, I want to be able to make some, and I trade futures, so I'm not knocking futures, but just the idea of a retail person day trading futures part time, being able to make a consistent living is a lie. It's a fallacy. And from there, then, so the question is how can you make a consistent living? And so options are structured in a way to give you an advantage, and specifically by selling options. So if you think Apple's going to go up, you sell puts. Now, not to get too technical on this, but you just do it as a spread, and that way you limit your losses. And so by selling options and selling premium, you're putting yourself in an advantage because even if the trade doesn't work out like you expect, like you think it's going to go up, but it goes sideways, you still make money. So that's what I would do is just say, like, learn to sell spreads. And, if you think something's going to go up, you sell a put spread. If you think something's going to go down, you sell a call spread. That's all you need to do.
Perfect. That brings up two good questions, I think, real quick. For anyone that's not familiar, your puts are when you make money, it's going down. Calls are if it's going up. Did you want to give a real quick options overview? Because I know you recommend that. And actually, that's all I do now myself is basically options trading and some swing trading and most of your strategies. And then
okay.
Sorry, start with that.
Oh, sure. So, and I'm looking at my screen right now. Like we've got a bullish setup in Apple. So Apple right now is at $155, and either it's going to go to 160 or it's going to stay around 155 for a while. Those are the two high probability trades. Now, of course, there's also an chance that the markets may sell off. So based on that, we're selling the 155 puts that expire next week for like $1.60. So essentially, if you sell one put for $1.60, that's $160 because one put option represents 100 shares of stock. Now, we didn't want to have naked exposure, so you sell the 155 put, you buy the 150 as protection, gives you like $1.30 credit. So we sold 10 contracts, so that's a potential to make $1,300 by Friday, just if Apple goes sideways to higher.
Perfect. And the other thing I think you brought up that's good for someone starting out, what size of an account do you need before you start actively trading versus maybe just putting it into a fund or putting it into like a safer option?
So if you are thinking like, oh, I'd be fine with 10%, 15% a year, just put it into a fund. It's just easier. And if you want to get semi-active, we always say, like, look, if you're selling options and things like that, an actual reasonable semi-aggressive goal is to make 2.5% a week. So that's our goal. So that's, obviously it equates to over the course of a year, a little over 100%. But if you're active, and you don't have to stare at the screens, and in fact, I encourage people not to stare at the screens, but you don't even have to put a lot of money at risk. If you've got $10,000 and your goal is to make 2.5% a week, that's $250. You don't need to bet all $10,000 to make $250. So that's kind of my plan is I actually wire out 2.5% of any profits every week. Anything over that gets to stay in. And so the goal is you're actually not only growing your account, but you're actually pulling money out of your account every week while it's growing. If you're just starting, so what's going to happen in the beginning, you're going to make mistakes. So let's say that you've got $100,000. Start with 10. And then that way you can kind of, make your mistakes on a smaller account. Now, if all you have is 10, that's fine too. But that's just, for people that are, and I mean, I've talked to people who are like, oh, I just sold my business and I got $2 million and I put it all in the markets and now I got 500,000 left. I hear that story all the time. Trading is a skill. Just because you can open up a laptop and look at a chart does not mean that you're a trader. Okay. And you've got to learn. It's a skill set that you have to learn. Part of it's psychological, part of it's technical. So, give yourself like 25 trades to practice. At the end of 25 trades, if you've made money, like, okay, I did 25 trades, I followed a plan, and I made $2,000 net. Yeah, some were winners, some were losers, but I made $2,000. Then you could increase your trading size. So that's the biggest thing. Don't get too wrapped up on one trade. Some trades are just going to kick you in the teeth. That's just how it works. But over time, you get 75, 80% winners. Those winners exceed, your 20, 25% losers, and now you create consistency. On the next trade, all of us are equal. We can all either lose money or make money on the next trade. As a skilled trader, over 100 trades, I'm going to make money. A newer trader, probably not, if they don't know what they're doing.
Perfect. So if you're still going along with newer traders, how do you decide where to open an account these days? And are brokers still relevant at all, or do you say completely avoid them?
Yeah, no, it depends on it. So it depends if you're doing options. The two best options platform, one is Thinkorswim, that's been around for a while. A newer one, Tom Sosnoff, who again, mentor of mine, he started Thinkorswim, sold it to TD Ameritrade. He's recently started a new broker called Tastyworks. So I've been using that one, and that one's been awesome. It's super fast. It's on the same technology that high frequency traders use, and so then that's been awesome. Those are the two. If you really get into charting and things like that, like I like TradeStation as well, but for order execution and things like that, if you're doing options, then Thinkorswim or Tastyworks.
Okay. How do you decide what market to invest in, whether it's stocks, futures, options, forex? What determines which one of those maybe you belong in, or should you spread it out?
So it goes back to, futures and forex are probably the most sexy for people with smaller accounts. If you've got $500, you can trade forex. But in terms of consistency, options give you it's by far the most consistency in terms of in options. If you're, like if we were talking about earlier, it's like, okay, I'm selling this put spread in Apple, but man, Apple didn't do what I thought. I can still make money on that. Whereas if you bought the euro as a currency, it works or it doesn't. Like, oh man, that one kicked me in the teeth. So, again, it goes back to what your goal is. If your goal is, I want to try to make a large amount of money, okay, which could end very much not well, then yeah, it's like, okay, go into futures, make a couple of big bets and hope that you timed it right. If you're more interested in consistent income over time that you can rely on, then you want to do something where the probabilities are mostly in your favor, and that's selling options.
Okay. As you talked about, trading is a skill. So as you do get more experienced, I would imagine like any other skill, there's certain things we need to focus on improving. As I become a more experienced trader, what's the one thing I need to remember to keep up with and keep developing?
Oh gosh. So the funny thing is with trading is that everybody goes through this period where I call it's a search for the holy grail. Like, okay, I got to find the one thing because nobody likes being wrong. And we're all taught growing up, like, don't be wrong, make good grades, shut your mouth, listen to the teacher. And that is just horrible for trading. And in trading, it's like, it's okay to be wrong. In fact, the quicker you find out you're wrong, the better. Get out, small loss, and move on. But a large part of it is once you learn the basics, if you really get down this path, I promise you, if you have one chart, like 2 indicators and 1 time frame, if you just watch that for 4 months, you're going to figure out a way to make money from that. So you don't need every new gadget or every latest thing. So it really just comes down to having a slight edge. And all an edge is that you have a slight probability that one thing's going to happen versus another. If you're sitting down at a blackjack table in Las Vegas and you knew on the next hand you had a 75% chance that you're going to get a blackjack, you'd bet bigger. So that's really all it is. And so it just comes down to you just have to be mindful. Don't let the monkey brain start taking over, because if you have 2 losses in a row, what happens is psychologically, and this happens in business as well, if you have, say, 2 bad experiences with customers, then all customers, are a pain in the ass. If you have 2 bad trades, then, God, trading sucks. And you're going to take that mindset with you into the next trade. So now you're trading from fear. And if you're trading from fear, you're just going to make all kinds of mistakes. So if things are going a little nuts, and this is applicable in business with your spouse and in trading, stop. Go get a massage. In trading, I always say give yourself the gift of going flat, so that way you're neutral. In business and stuff like that, write out the email. You're so angry, and then throw it away. Just go for a walk. Take 24 hours to decompress and come back with a neutral state of mind. And again, business, trading, anything. If you set aside your preconceived notions, if you set aside your that monkey brain that's screaming inside of your head, if you can just kind of disassociate yourself from that, things are so much easier.
I think that's great advice. And, I talked about before how your systems had helped me for walking away and some things like that. Obviously, you study psychology a lot. You've put some good things in place. Have you come up with any tricks to make being okay with being wrong a little easier, to adapt some of those things a little faster for people that aren't, people that have lived their life so far and they give into that anger, frustration, or fear and keep making bad decisions?
Yeah, so the best thing to do is, first of all, and this, again, everything I learned the hard way. So the worst thing to do is, say, you're in a losing trade, or, a client ticks you off, or an employee ticks you off. If you have got to, so what a lot of people do is they try to like repress that, just like, oh, let me just shove that anger down because I don't want to lose control. But what happens is it still stays there, and it just, it can cause migraines, all this kind of stuff. So what I do, and I learned this, it was either a meditation or something like that. I forgot where I learned it. But what you do is just, and I do this in trading, business, in meetings, because it only takes like 30 seconds. But you just close your eyes, and if you're anger, let that, just feel that anger. Just feel it like flow through you, exploding in your head. And after like 20 seconds, it just goes away. Like, then you're clear-headed. So the mistake a lot of people make, and whatever the emotion is, even excitement is actually bad in trading, because if you're excited, you're going to do stupid stuff. So fully experience that excitement and let it dissipate. But you're getting back to a neutral state of mind. And so that's the best trick I've learned, and it's just being conscious of that. Because, if you're pissed off and you shove it down, you're just going to carry it with you all day like baggage. Just fully experience it, let it go, and move on.
Do you think actively trading is appropriate for retirement accounts?
Well, so I want to clarify active trading. So I am not a day trader. And so to me, an active trade is, let's call it 5 to 7 trades a week. And an ideal trade for me is I'm buying something on Tuesday, closing it out on Friday. So I do, which means for people that are into trading, which means I don't look at like 5-minute charts. The best thing you can do as a trader is only look at 30-minute charts and above. I tend to look for things what I call, meat on the bone. So if there's a 5-minute chart and Apple might go up 10 cents, who cares? I would rather be patient and wait for like, wow, here's a daily signal, where Apple may go up $3 or $4. And so that's a big part of it. I think day trading, if you're just day trading, think of it as a business. If you're day trading, it's low margins, high expenses, because you generate a ton of commissions. Swing trading is high margins, low expenses. So from a business perspective, day trading is the worst thing you can do. But swing trading is an awesome business. It's like, wow, the margins are great, the expenses are low. That's the kind of business that I want.
Perfect. So kind of a tricky question. I've read, I'm sure you've heard, people tend to think the markets are rigged, especially by the market makers. Like, they'll come and mess with you and knock you out one time. Do you think that's true? And if you do think that's true, how do you fight that?
Yeah, I absolutely think it's true. And the first thing is just realizing that there is, but people are worried about high frequency traders and all this kind of stuff. But at the end of the day, the market's the market. And so what's fascinating about this is that even over the years of doing this, as the high frequency traders came in and stuff like that, it actually hasn't impacted our trading. And if anything, it's made it better. The one thing that they do that doesn't happen, that used to not happen, is that they deliberately break patterns. So what does that mean? So here's, if you're familiar with trading, it's like, all right, here's a support level, right? And now price is coming down to support. In the old days, support held. Today, it gets broken, they rip out all the stops, and then they rip it up, or vice versa. So just think of it in terms of patterns are deliberately broken to fish for liquidity, for stops. So if you know that, here's a trick. If you're getting into a trade and you're thinking, all right, well, here's where I'm going to put my stop. Well, guess what? They're going to come for that. And it's not because they see your order. It's because everybody's read the same books. They know that if everybody sees this double, whatever the pattern is, if this is support and they're going to play stops down there, they want to go get that liquidity, which is all the stops. So whatever you're looking at is like, okay, here's what I'm going to get, and here's my stop. All you got to do is make your stop your entry point, and then you circumvent all that crap.
Perfect. Okay. So before the interview, one thing I touched on was that you've really done some what I would consider ingenious things in marketing before they were common. And some really creative things. We now see a lot more of the marketing funnels integrating, offline and online. But you were literally the first person ever that I bought a book from that said, come to my website, give me your email. This was 10 years ago. Here's my free newsletter. Oh, by the way, there's a better one, but we have a really inexpensive trial. And then, upsell, side sell, et cetera from there. How'd you come up with that? I mean, now those programs are everywhere, but 10 years ago that wasn't common. So what inspired you to decide that, hey, what we would call tripwires now, or lead magnets, or these mini offers that push people through to become better and better customers? How'd you come up with that?
So what's interesting with that is I went to, if you guys are familiar with Yannick Silver, he used to do something called the Underground Marketing Seminar. So I think this was in 2005 or 2006. My business partner and I decided, like, hey, we should go to this. It talks about websites and things like that. And we're like, okay. And so when we went there, we just learned the stuff we didn't even know about. And it was just like, oh wow. And what was funny though is that we started going to these things, and what we found is at these conferences, there was a lot of people there that were into marketing, but had their product was crap. Like, pardon my French, but they sold shit in a box. But they were really good marketers. And we were just kind of like, wow, we have actually really good content. What would happen if we used these same marketing techniques, but actually really helped people? And so that's what it was kind of started with. And so they're just things like we just didn't know. We just thought like, hey, this is good stuff. Of course people are going to want it. But if you aren't marketing it correctly, like, because what will happen is, like, say if you've got a business and you've got and you've got to have good content. I mean, if you don't have good content, what are you doing? So, but if you've got good content, what's going to happen is no one you're gonna have an offer out there, but there's also, and especially today, because everybody knows all the gimmicks, right? So there's gonna be 5 other offers out there that are like, oh no, this is the best thing ever. You're gonna double your money every week. So here's a charlatan with a great sales page, and here's another person that's got the best content on the planet, but their sales page isn't convincing. It's not hitting the basic psychological points that causes people to buy. So I just got to the point where it's like, you know what? If we don't at least try to compete against the charlatans, we are doing people a disservice. So it's a fine line, because I hate what I would call smarmy kind of like overpressure, that kind of stuff. But there are little things that you can do to give yourself a fighting chance over all these other snake oil salesmen out there. And so people will do that. Now, what happens though is if you've got good content, once people experience it, $7 trial or something like that, it's like everybody is like, oh my God, thank you for putting this together. And so it's that fine line of like, we do think it's we do people a disservice if they don't at least get to try us out, because we know, and we've seen the other stuff that's out there. And in our niche, there's a lot of bad stuff out there. And so it's just trying to, how do you, and this is always a constant question, because how do you want to, the content part we feel comfortable with, like we give good content, but you also want to be able to sleep at night that you're representing things in a way that's accurate, but at the same time, you have a fighting chance against, the charlatans that are out there selling crap, because you owe it to yourself to make sure that people aren't going over there, because what's going to happen.
Absolutely. So as someone that's done this, I would consider successfully for quite a while, what's one big tip or one thing that a business owner needs to remember to compete with those charlatans? What's that one thing that they, at a minimum, need to put out there so that people can find their brand, or that they're not just getting lost in the noise?
Yeah. So that's a good question, and I can kind of speak, and I don't think things have changed as much as people think, like over the last 10, 12 years. So I would say one of the main things that's helped is in 2005, I wrote the Mastering the Trade book. And then, subsequently some other editions came out. But what happens with that is that it was by a real publisher. So all of a sudden it's kind of like, oh, that was actually something that stood out. So look, it was hard to do. It took me a year. But it's kind of like, that book, The One Thing, that was like, wow, that really did make a difference. And when people read it, it resonated with them. So that helps. And that's going to help stand out above, like, all the social media crap and stuff like that too. Now, for social media, look, you want to use the tools of the day. So we do have a very, social media is not our strong point. We do, we put we post some stuff on Facebook fan page, and, I'll post some stuff, but it's not our main thing. But you don't want to completely ignore it either. The other thing I found, and really what helps the most, is like cold traffic is hard. Like, you've got to be really, really good to figure out how to convert cold traffic. It's expensive, and we're honestly not that good at it. But where we are good is forming relationships in the industry. So like, say with a TD Ameritrade or a Tastyworks or Chicago Mercantile Exchange. And the key to forming relationships in the industry with these large corporations is you got to figure out how you can help them do their job, how you can help them look good to their superiors, and that's all that is. So you talk to someone, it's like, yeah, man, our goal is, we got to get, this many accounts open for our marketing plan. It's like, oh, well, we can help you with that. Let's figure out something. Whether it's exposure or something like that too. And so that's really, to me, is powerful, and is and because what happens is that you get the it's like a warm referral. So if you've got somebody that's, say, uh, you know using that product, and then the people that make that product are going, yeah, if you want to, if you really want to learn about this product, you should go check out John and check out Simpler and see what they're doing over there. I mean, that's huge, because it's trust, and obviously you've got to earn that trust, and you've got to build on that. But something like that versus like cold marketing, way easier. So I would just say invest in different relationships like that. Every industry is going to be different, but it's if you're selling something on Amazon, how can you integrate yourself into Amazon? Amazon wants to sell more stuff, so that's what I would do in that situation. And so anything like that, there's always big whales out there that you can help. And if you're helping them, guess what? One day they may just acquire you. So it's a win-win that way, marketing and a potential exit for your business.
Perfect. I think we have time for one last question, and this is something that I'd like to know. I read your book. Obviously, that's how I found you. And one of the things that stood out to me was I read a lot of trading books, but your book got into here's how to set up your computer system the right way. And, sometimes playing video games will teach you the skill set that you need to, be a better day trader. And things that people really didn't touch on, typically, that did resonate. Because I'm like, wow, this is really things that I'm not reading everywhere else. And also things like your airplane trade. Like, before hashtags came back and Throwback Thursday, you came up with regular posts and ideas that were a little more creative. For a typical business owner, how do you come up with some things that maybe typically in your industry people aren't seeing, so you can stand out that way?
Well, that's a good question. And it kind of goes back to something too, where I think the biggest mistake a lot of people make in business is they're trying to attract leads, and really you should attract buyers. I would rather have 10 buyers than 1,000 leads. So if you're trying to do 1,000 leads, if you're trying to get 1,000 leads, what you're doing is, I would call it more generic. Okay. But if you're trying to find 10 buyers, you're going to do something specific that may resonate with them. So one example of that is back in, I don't know if you've seen the Before He Trades video. So we did on YouTube, if you type in Before He Trades, it's a music video. We had it professionally shot. It's a rendition of Carrie Underwood's song. It's funny if you're a trader. Well, traders would see that and like, oh my God, that's funny. I'm going to go check these guys out. Now, a lot of people who aren't traders would see that and go, I don't get it. Okay, great. We're not interested in you. We're interested in people who get that video. If you get that video, we understand you, kind of a thing. So that's really a big thing. So the whole idea that it's like, oh my God, I need to get 100,000 leads. You don't. You can build $1 million business with 1,000 buyers and just go find those 1,000 buyers. And the way to do that is to be narrow. Don't try to appease everyone. If you're trying to appease everyone, no one's going to care. Focus on that, those specific ideas, because there's going to be people that resonate with that. And even better, there's going to be a lot of people who don't, because you want to filter those people out. You don't even want to deal with them. Go find 1,000 people out there that want your stuff.
Yeah, a lot of people, I think, would say polarizing is actually not a bad thing. You want that specific audience. And I think it was Jason Swank, if you're familiar with him, we talked with him, and he said, who's your audience? He's like, and don't tell me it's small business owners, because that's, hundreds of thousands of people. He's like, who is your audience? Like, pick that specific audience so you can actually reach them.
Yep.
So I think that's really great advice. Well, thank you, John. Really, this was great.
Yeah, this is awesome. Thanks
both
for
on the investment side, the business side. I think you were perfect for this summit. I really appreciate your time. I'm sure a lot of people would like to follow up with you and keep seeing what you're doing. So where can we send them? That would be best for you.
Sure. Well, so if you've got anybody interested in trading, you just go to simplertrading.com, and I would encourage you to try our $7 gold trial. And I always say, like, look, milk it for 30 days, get all the knowledge you can, and then go do it on your own if you want to. That's totally fine. But at least that way you learn about what we're doing. We send out text alerts of our trades. And if you have questions about business and stuff like that, you can email me, just John, John, at simplertrading.com. I'm actually working on a book on entrepreneurship, just stuff that I've learned over the years, and it should be it'll be pretty fun. That'll come out like in the fall, and it's one of those things where it's like, look, I'm not starting an entrepreneur site or anything like that. I just, there's ups and downs in business, and I've gone through great times and shit shows and all that kind of stuff, and it's like, all right, how do you, I've watched a lot of businesses come and go, especially in like the info marketing space, and it's not only learning for the flags, like, okay, this is what causes a business to implode, but how do you get through those times? And so it'll be fun, and I'm looking forward to getting that out there, just to share that experience.
Perfect. Well, we'll make sure we get those links under your video. And we'll make sure we keep people informed about your book as time goes on, too, that have been at this summit. So that'll be great.
Sounds good.
So, well, thank you very much. Really appreciate everything.
All right.
This was great.
Yeah, thanks.
We'll talk to you soon.
Okay, bye-bye.
Bye.